Excellent. Well, thank you. Good morning, good afternoon from wherever you're tuning in, and welcome to today's webinar on digital asset regulation. I'm Federico Brocate. I'm the head of the U.S. business at 21 Shares, and it's a pleasure to be here with all of you today to delve into a topic which I think is truly shaping the future of digital assets and, dare I say, finance more broadly. For those who may not know us yet, 21 Shares is a global digital asset manager, and our mission is to make digital assets more accessible, secure, and regulated for all types of investors, big or small. We're a Zurich-based firm, but have a presence in 16 markets around the world, and we manage over $8 billion in client assets. And we most recently entered the US market and launched our own spot Bitcoin and spot Ethereum ETFs, that's where our partners BitGo come into play, who we see here on the call with us today. For those of you who may not know BitGo, they're a leader in their own right when it comes to all things digital asset custody and security. They are the first crypto custodian to focus exclusively on institutional clients and have been a qualified custodian since 2021. What makes this partnership so interesting is that together we were able to revolutionize the market standard for spot ETF custody. With BitGo, we rolled out the industry's very first multi-custodial model, meaning we have multiple custodians safeguarding client assets, and we've eliminated all single points of failure. Now, shifting back to our focus for today, we're particularly excited about this conversation because 2024 has really been a pivotal year for all things digital assets. From the approval of spot Bitcoin ETFs and Ethereum ETFs in the US to significant regulatory advancements worldwide, there's a lot for us to unpack here today. So when it comes to our agenda, there's a few things that we're going to cover today, focusing on exploring the current state of digital asset regulation and any lessons that we learned in 2024. We're going to talk a little bit about the potential impact of a Trump presidency on our asset class, and we're going to look ahead to see what potential regulations could be coming down the pipeline. One quick housekeeping note before we get started. This panel will last about 45 minutes total, and we'd like to reserve the last 10 minutes for any questions from the audience. Many of you have shared some already, which thank you so much for being proactive and putting your questions into play. But if you would like to pose new ones, please feel free to send them over through the chat function in the webinar today. So without further ado, let me quickly introduce our panelists. On the 21 Shares side, we have Andrew Jacobson, who's our head of legal. We have Joseph Diglio, who's also our head of compliance. And on the BitGo side, we have Jeff Horowitz, who's their chief compliance officer, and we have Krishna Juvadi, who's their chief legal officer. So, gentlemen, I think we all know the question that everybody wants to spend some time on today, which is, what does a Trump presidency mean really for digital asset regulation? But before we get there, I'd like to spend a little bit of time recapping 2024. So I'll start with the BitGo team here, and I would pose the first question, which is, what were your expectations going into 2024? And how did they compare really from the regulatory reality that we lived through this year?
Thanks. I don't think we had great expectations going into 2024. The administration proved that they were not going to give us clarity on a number of fronts. What can a bank do? Is a bank allowed to custody? Where did SAB 121 fit in? Still, what's a security or a commodity? What we saw were enforcement actions. And that was the only guidance we were able to actually glean of where their head was at. I think we were all waiting for either a change of administration or some different leadership that actually could see, both the pros, the cons, the benefits. But regardless of, where the outcome was, the industry has always just asked for clarification. We haven't asked for, no regulations, no rules, no safeguards, but we were operating under the last 4 years without any way to move forward from an innovation perspective, how to build and grow a company, because all you were worried for was, am I going to get a Wells notice in the mail after I try and launch stuff? So, repeated efforts going to Congress, to Senate, we had stalemates. We had some bills that made it through Congress, but got shot down in Senate. So I think our hopes really were on a change of administration to have a different outlook and a different perspective. There are things we need to address, but hopefully we will get an administration that wants to have an open and honest conversation.
Yeah, that's great to hear. I think totally agreed from our end. For the 21 Shares team, though, shifting focus a little bit from an issuer perspective, I guess what lessons can we carry forward into 2025 when it pertains to spot ETF launches in the US in particular?
Yeah, no, I'm happy to take this one, Fede. I think there's a couple of lessons. If you look at 2024, Jeff, I think you're right. There really was not I did not expect regulatory clarity in 2024. What I did expect was expanded access. So the moment that the SEC greenlit spot Bitcoin, I felt there was a very strong legal case for spot Ethereum, which I know we'll cover later. But I think generally speaking, the fact that crypto was proven to be an eligible underlying for a commodity-based ETF, I mean, that was a fundamental shift in financial markets and regulatory markets. So I think that's one really key takeaway. What we did, from an issue perspective, I think the lesson really was, we've been doing this for a long time. We've been doing this for over 6 years now. We have a high conviction in the asset class, and we believe it can be done right. And so we presented our case to the SEC on spot Bitcoin. We used data, we leveraged our track record, and we demonstrated this was actually a safe and secure asset for investors. And at the end of the day, when the SEC approved the spot Bitcoin ETFs, our research was actually specifically cited by the SEC in their approval order. So, I think the lesson learned that I have is when you believe in something, when you have a conviction in it, put the data down, put it on paper, and advocate, and change can happen.
That's a great answer, Andrew, and I think definitely something that we were seeing on our side when it came to these product launches. For the BitGo team, though, as a custodian, how did you prepare for some of these product launches, right? And especially if I think about the case for Ethereum, the approval process with the SEC was a bit more last minute, or if you will, unexpected when it did come through. How did you guys as custodians prepare for these product launches?
Krishna, I'll go first. Look, as we saw the applications coming through and them only listing maybe one custodian to start, I think there was safety in numbers. Like, let's have the issuers have multiple custodians. We saw the concentration risk in 23 and 24 with Silvergate and others, right? So let's spread the amount of risk, not just to one custodian. No one challenged, whether you are a publicly traded, an OCC chartered, or a state chartered trust company, you are a qualified custodian. And then we started working with all the issuers, whether we were their first or their second or their third, right? We wanted to find good partners. The product makes so much sense. There's complexity in trying to understand my seed phrase and private keys, but the market was clear. People wanted to invest in this asset class. And what's the easiest way? Through an ETF, through a mutual fund, through a security that people are comfortable with. We took the complexity out of understanding how the blockchain works, but understanding, hey, I want a 2%, 3% allocation into this market. I don't know if it took a lawsuit to get Gensler to get comfortable. Regardless, we got there. But I think that was part of that 2024 theme. Coinbase and others had to sue the SEC to get clarity. The regulation shouldn't come from judges, right? And judges who give different opinions, right? So we really needed the clarity. And this, I think, was a launching pad to more clarity to come. I think later we'll talk about whether we see a Solana or a Cardano ETF remains to be seen. But the fundamentals of having a trusted custodian separate from an issuer, an asset manager, et cetera, those things make sense. And it follows the way the traditional markets work. So for us, we've been a safe custodian of Bitcoin since 2013. It was a logical expansion of our business to hold the underlying Bitcoin in whatever wrapper, whether people want to hold it in our cold custody, they want to hold it as an ETF, or they actually want to use our hot wallets and go through the technology of actually owning your own keys. We're able to offer all three. And I think customers want choice.
I couldn't agree more. I think customers definitely want choice. And I think the ETFs have definitely proved to be a extremely valuable way for more clients to participate in these markets. Before shifting ahead to next year and what to expect, I think Andrew and JD, one question for you guys. Was it really research and I think the strength in numbers, that the BitGo team mentioned as really the catalyst for these approvals? Or was there something else at the SEC that you think shifted to get these products online?
Maybe I'll give it a view and JD, kick it to you. I don't think the SEC did this willingly. That's my personal view. I think the SEC was forced to, from a legal perspective. When Bitcoin was approved, we didn't even know it would be approved up until the day it was approved. Nobody knew. And so, and then Ethereum, we were quite surprised, just to be open about it. And so, I don't know that it represented a policy shift from the current SEC administration. I think it represented a reality check, quite frankly. That's my perspective. JD, but we'd love to hear your view too.
Yeah, in line, Andrew. I think when Grayscale won its case late 2023, people's eyebrows raised like, is this now the time? And sure enough, in January of 2024, Bitcoin approval came through, and it's not a surprise that Bitcoin is the most, I don't want to use the word trusted too broadly, but the most trusted, kind of crypto asset out there. So that one came first. That wasn't a surprise to me, especially on the heels of the Grayscale decision. The one that was a surprise to me, which Fede, you mentioned earlier, the Ethereum approval in 2024 specifically, the SEC was actually looking into the Ethereum Foundation, and there's a question around its status as a security or not, a commodity or not. So I think that one did kind of catch us by surprise in terms of the dropping of that kind of inquiry, the approval of the spot Ethereum ETF, but again, I think most people would put Ethereum second in line, right, to Bitcoin in terms of a trusted crypto asset. So I know we'll touch on maybe some others coming forward, but yeah, I agree in the sense that less than a policy shift at the SEC. I think based on some of the outcomes of the litigation that was going on, the ball started to roll, and maybe Ethereum, while it caught us a little bit by surprise, was the next logical choice for an approval, and we're obviously all optimistic about what the next one will be.
Great. So I think shifting our focus now to the future and what to expect. Obviously, we had an election in the United States with President Trump being, chosen by the American people to be the next president of the United States. What does this mean for the regulatory outlook, in your guys' opinion, over the next 6 to 12 months following this election, right? What regulations could we anticipate? How could they impact growth of our industry? And if you could touch a little bit about how that might impact adoption of digital asset markets more broadly. Krishna, I'll pass it over to you to get us started on this one.
Great. Thanks for that, Betty. I think there's a few things that we're looking for. One is in 2022, we were very close to a stablecoin bill. And I think we were close in the sense that we had a few drafts. We felt that the House was getting close to passing it, and then FTX happened. So that's sort of put the stablecoin bill efforts on the back burner. And I feel that that's a good place to start in DC, because there was almost wide support for it on both sides of the aisle. There are numerous supporters of it. There's already numerous ideas of floating in DC. I'm bullish that the first half of 2025 we do see some action on a stablecoin bill. The next area I think is the SEC. This is one we've touched on it on a few points so far this afternoon. I was just before BitGo, I was at Exchange where we did receive a Wells notice from the SEC and had an action. The unfortunate thing is there was no ability to have a real conversation with the SEC. I think the thing that I'm really looking forward to in the first half of next year is the ability to have a more robust conversation with the SEC. And I think it's not just us; it's custodians, exchanges, various companies. I think if we can at least start the process of starting to draw some lines in the sand on what we can start to innovate in and not, I think that'll be helpful. Then also we're looking forward to some changes at the FDIC and the OCC. A big part of crypto is fiat rails. It's regardless of what happened in the last 2 years with Choke Point 2.0, I think the pros and cons of that approach with the FDIC, I think it did hurt the industry. So we're looking forward to a more studied and even-handed approach of regulation from the FDIC and the OCC, the idea of being able to open up a national charter again and accepting applications, we're optimistic that I think so. We are looking for a lot in the first 6 months, and I know that's ambitious, but I think a lot of supporters of crypto were active in this election, and I think they made our position known in the election. The American American voters voted for candidates who were out there with the platform in crypto. So I think we have a mandate, and I feel like we should press for action the first 6 months. So thank you.
I would add, Krishna, I 100% agree with that. I think two or 3 points I want to add. One is, what am I predicting? I have no clue. I think you're probably right. Stable coins seem like an easy thing, back on the table, bipartisan. We have a different White House. The White House was largely reported as the blocker there. I like to always take a step back on and look at principles. So I think there are 2 principles that the new administration should really focus on. One, resolving the status of the asset class. Is it a security? Is it a derivative? Is it something else? At this point, that is the greatest barrier to entry, in my view, that's holding back innovation. So figure out what is the token and then move on. I think we want something that's proportional, something that's predictable for the industry. And that to me is the first thing. And then second are just clearer guidelines for builders. We are an asset manager. We're also a tech company. And so we firmly believe that, the great barrier to entry, which has been, is my token going to be a security? Is my smart contract going to be, an FCM, et cetera? Is that that has held back the industry from building. And, I think, I'm a lawyer. We got a bunch of lawyers on this call. The thing that always kills me is when you're an early stage startup, you're spending more on lawyers than you are on engineers. That's not right. So my hope is clarity, predictability around those 2 principles, I think will pay dividends big time for the industry.
And can we see that happen in the next 6 to 12 months, or what is the timeline here for a lot of the change that we're looking to bring to our asset class?
It's where there's a will, there's a way. I think a lot's going to depend on the strength of the message coming from the White House, whoever takes the helm at the SEC, at the FDIC, and the OCC. I think a lot can be done in 6 months, especially since a lot of work's already been done. It's for those that follow the hard work of a lot of our leaders in crypto. They've already invested a lot of time in DC educating the staff of a lot of people on the Hill. And the staff, the SEC, a lot of companies have tried to work with the SEC. So I think a lot of what Andrew had said, clarity on whether assets are securities or not, a lot of the groundwork's been laid. So if there's a will, we can move fast here. The interest in moving fast is to go. You asked a question earlier. What were BitGo's priorities going to 2024? We largely were looking outside the United States. We were growing in Europe. We were growing in Asia, in the Middle East. And we're going to continue to do that. So are a lot of companies in crypto if the U.S. does not pick up the pace. I think we will fall further behind if we do not pick up the pace. So I feel that there's a mandate. I feel that if the right leaders take these positions, a lot can be done in 6 months, especially on some of the things that we discussed, which is stable coin clarity on if digital assets are securities or not, especially the top ones that are traded.
I think a couple of things to add. We saw lawsuits. A Speedy got denied access to a Fed master account, right? We only had, one approved OCC National Trust Bank convert and be approved. I think those are going to be back on the table for discussion. Going back to our concentration risk, right? You should have everybody have equal right, not just because there's a change of administration that, the clock stopped. And I think an important one happened a few weeks ago with SAB 121, where, this was repealed, but the White House vetoed it. But then the SEC kind of lessened their stance and gave an exemption to Bank of New York Mellon. So I think banks want to principally be able to hold crypto on their balance sheet. They want to be able to intersect with blockchain networks and not be held to well, that's not prudent banking thought from our regulators that, oh, if you're doing that, you're going to be deemed higher risk, and we're going to come in and examine you and look at you differently. So I'm really hoping that the larger banks have the ability to start intersecting and stop, not allowing fintechs, crypto companies to get banking partners. We saw the concentration with Silvergate and others with a quick spook and a run, right? We want to spread that risk and allow banks to take their own risk appetite. Do they want to bank the crypto industry, whether on an institutional or retail level? I'm really hoping that opens up to smart, banking plays, not that everyone just jumps in, but that they can evaluate each project, each company on their merits, rather than be second guessed and worry that I'm going to put the rest of my bank at risk if I, give some kind of banking service to the crypto industry. So that's what I'm really hoping in 2025 opens up, because without banking rails, there's only limited stuff we can do here in the U.S.
Yeah, and Fetty, if I may, I'll just close this out really quick by just mentioning that crypto now, where it wasn't the case probably definitely not during the first Trump presidency or the Biden administration, crypto now has political capital. Like it was a big part of the election process itself, whether it was donations through political action committees, whether it was the Republican National Party putting out a statement, like an actual policy statement on crypto, or and I smile a little bit to some of the headlines I read recently about Trump himself wanting to create his own, blockchain on the Aave network. But I think a lot has changed in terms of the political weight and momentum that crypto now has. So I'm not saying like miracles can happen in 6 to 12 months, but it definitely has some momentum behind it from the the powers that be in Washington. So things could change relatively fast.
I couldn't agree more. I think I saw a stat where it was 50 out of the 58 candidates that were supported by crypto super PACs won their respective elections, which means we're going to have a political landscape that's a little bit more favorable, right, from a constituent perspective there. And the market certainly seems to be thinking that what you guys are saying is true, right? Bitcoin is trading somewhere between 87 and 88 right now. I just checked a second ago. So that's definitely signs of a tailwind. And I think a lot of that is based on some of these regulatory advancements that people are hoping we're going to see over the next year, if you will. So thinking a little bit about what it means for the future from a product and an ETF perspective, what does the path forward look like for growth and innovation in digital assets, and what do you guys think could be next for that group of assets or of tokens that are looking to come into the ETF in the US? And Andrew, I'll start this one with you.
Yeah, this question, I think the answer to this question is different now than it would have been a couple of weeks ago. Even a few weeks ago, pre-election, I had a pretty high conviction that the SEC would ultimately be forced to allow many crypto tokens as underlyings for a commodity ETF. And I'll tell you the reason why. In recent court cases, the SEC has finally admitted that there's a distinction between the token itself and the token as the object of a securities transaction, of an investment contract. And so, the most famous case is the Howey case. In the Howey case, plots of land within an orange grove were sold as part of an investment contract, but the SEC never alleged that the oranges themselves were securities. It was how they were packaged, how they were marketed, the promises made, et cetera. So the SEC in recent court cases has finally admitted that the token by itself in almost every circumstance, putting aside some exceptions, is not a security. It depends on how it's packaged. The next question is, well, what does that mean for ETFs? What that means for ETFs is when you take a token and you package it as part of a regulated wrapper, that's very different than selling it in other circumstances in which maybe it is a securities transaction, maybe it's a derivative, maybe it's something else. And so, I think that arguments that we've made publicly, which everyone here can pull up, are that distinguish the token from how it's sold, and I think that opens up a pretty clean pathway to ETFs and crypto as an underlying.
On the BitGo side, how do you guys see your company growing in this new regulatory environment as well? Whether it's pertaining to licenses, the products, or different things that you guys are exploring in the US.
Jeff, I'll jump in and hand the baton over to Jeff. I'll be honest, the sky's the limit. I think this is an exciting time to be in crypto because I feel up until now in the United States, a lot of our colleagues have had good ideas and they just didn't get far because of the climate. It's something Andrew said before, is a lot of startups have high expense in terms of the legal side early on, which makes it really hard to get a business off the ground. In this new environment, what I'm really hoping for is that you can actually have a robust conversation with your regulator. The ETF story is one of, you had to challenge the regulator in court, you had to push back, and finally they relented. But that doesn't mean there wasn't a conversation before. A lot of companies tried to get this done. So we lost a lot of time, there's a lot of expenses. Here, I'm looking forward. There's a lot of innovation in trading, in staking, and other products and remittances and in payments that I feel that we're with a bit more regulatory clarity, the ability to innovate. There's a lot of exciting products that we can launch in the coming years. I think for sure in trading, there is lifting the veil of regulation through enforcement. There is an appetite for trading. I think the market will grow in the United States in the coming years, and with that growth, offering new products on the retail side and the institutional side will be exciting. Staking, I think, will finally get clarity and continue to grow. And then in terms of remittances, I think a lot of us are very close to offering very robust products in this space. And I feel we'll start to see more of those.
Please go ahead, Jeff.
I agree with Krishna. I think on the international front, I think many firms were posturing themselves, if we can't do it in the U.S. because our regulators won't get out of their own way, or Republicans and Democrats just disagree for the point of disagreeing, that we would be able to do many of these things with a regulator who actually tried to come up with the right framework. So, for instance, in Dubai, there's a regulator called VARA, which is a crypto-only regulator, which to me makes a lot of sense. Many other regimes are trying to fit crypto into a capital markets regime, right? I want to see, good disclosures and disclaimers and customer protection, but it doesn't always fit nicely. And, the SEC and Gensler's view was, our rule books lasted for 75 years. We're not going to change it. I don't think you get rid of it, but I think you got to adapt to it. So we looked around the globe. As Krishna mentioned, we're licensed in Germany and in Switzerland and in Singapore, and we're just about to launch in Dubai. And I really like the regulators' perspective. They said, what are the risks? And let's write rule books for each one of those risks. There are 7 or 8 rule books if you want a custody license, a trading license, a brokerage license. But they weren't held up on that. We can't decide what's a security or a commodity. We know what a risk is. We know how to disclose it, and then let's move on. So they really want to become, a hub for crypto and fintech innovation, and set reasonable risk-based kind of standards and frameworks. And that's what I'm hoping the U.S. can kind of get to in 2025. There are risks we need to address, but let's not have a stalemate and have everybody else look outside the U.S. for innovation, where we've got the best minds, the best companies, and the best platforms that we can deliver it here. So I'm hoping for a shift in mindset, right? Let's not just say no because it's easier to say no than yes. Let's figure out how to say yes with some controls and frameworks built around it.
And that's really interesting that you raised that topic of international regulators as well, Jeff, because I think one thing we've seen on our side, just having operated primarily in Europe for the last 6 years, is a different approach, right, to crypto regulation altogether. Andrew and JD, I wonder if you guys could share a little bit about what we've seen from an evolution perspective when it comes to regulation for this asset class abroad.
Sure, I'm happy to give the European perspective, because I think, Jeff, what you mentioned is a really interesting point. Regulators in the U.S. have brought a capital markets perspective, I think, at their detriment. I think you're much better off focusing on activity and who are the intermediaries than just, what's the offering. And I look back, putting aside Europe, I look back to the New York State BitLicense, which was issued in 2015. I mean, that is almost 10 years ago. It was actually issued for comment, years before that. So you've had a regulatory framework that is asset class agnostic. The bit license doesn't regulate, the token; it regulates the intermediary and the activity. And so, in Europe, I think the relationship between the regulator and the regulated is much more constructive. There's a dialogue. There's an opportunity to talk about issues, and I think regulators there are actually. I don't think they have a different risk tolerance. I think they just have a more openness to have a conversation. The US has become very adversarial. I don't see that outside the US. And so I think that's really the key difference is you deal with a regulator here, it's adversarial. You deal with a regulator overseas, it's a little bit of a different approach. JD, I'm curious what your view on this too, because you've been doing this for a long time.
Yeah, no, in agreement with you, Andrew. It seems perception based that dealing with these assets in different jurisdictions overseas has been a little bit more collaborative as opposed to adversarial. And that's I think obviously you're dealing with different regulatory agencies, regulatory bodies around the globe. You're going to get a cross section of who is willing to work on these products, and at different time frames, right? I still have hope, obviously, for the U.S. and everything that we were talking about earlier, in terms of the political capital it now has. But it seems like that some of that collaboration and momentum happened earlier overseas as opposed to what we've been dealing with here in the United States. And there our products for our firm specifically are on European exchanges, and there are rules, product-based rules, right, that we have to comply with on those exchanges themselves, disclosure requirements, and the regulators have been part of, approving, reviewing and approving those documents, those disclosures documents. So it's just, it's been a much more of a working relationship from my perspective, and hoping to get there, however long that takes here in the U.S.
And if you're a regulator and you want to understand, well, how does this product actually work? A big question for the from the SEC was, is Bitcoin, is Ethereum, is Solana a regulated market of significant size? And people often point to the futures market in the US, which is great. For assets that are not listed in the futures market, you can go look at how our products trade in Europe and how efficient things are there. They've been on exchange for years now, all physically backed. So, I think sometimes regulators, are just they just say no because they don't really want to do the work or they're not really quite sure what the answer is. And I would point them, look at other jurisdictions and look how they've done it. So.
Well, we actually just got a question from the audience, which I think is pertaining really directly to what we're discussing now, which, is there a trend, are there trends or a framework that are emerging across markets that are really becoming the gold standard when it comes to digital asset regulation? And perhaps MiCA could be an example that we point to, but curious from the group if there's another type of regulation from another country that we think is emblematic of a best or a gold standard, if you will. Perhaps Jeff and Krishna, I'll start with you for this question.
I mentioned earlier, VARA being, a crypto-only regulator was a good framework. I'm not sure if there's a perfect framework that's out there, like written in paper. Like MiCA covered a lot, but it didn't cover everything, right? But let's get moving, right? Let's not wait for nirvana where we have all 9 questions answered perfectly. Okay, now I'm comfortable to allow a bank custody an asset. I think it's that progress along the way, right? We got pretty far with stablecoin, but then it didn't make it. But maybe now on our second chance, we can get some stablecoin legislation. So I think don't let great get in the way of good. Let's make some wins. Let's move forward. Let's prove to the industry that yes, we can be safe stewards of this new asset class, right? We're 2 years out from FTX, and people have a short memory, but right, we need to make sure that the lessons learned from FTX are not repeated again. Lessons learned from getting over your skis and leverage, right? That we have some guardrails around that. I think then we could be off to the races because there'll be some comfort level that this industry continues to mature and they're making the right choices in the legislation that they want and in the legislation that they actually enact.
Yeah, I agree with a lot of what Jeff said, but specifically the importance of having the conversations. And I think what happened in crypto in the US is we tried to have a conversation with the regulators of the industry, and those conversations got stunted. They didn't get a chance to develop. What we're seeing outside the United States, in Europe, in the Middle East, and Asia, is those conversations were not stunted. They were allowed to grow, and they've gotten more robust with each passing year. I don't think there's a perfect regulator or a perfect structure. But what I really admire about what's happening in the EU, what we're seeing in Dubai, in Singapore, and in other jurisdictions is there's a willingness to have the conversation and continue to innovate with the market. I think in part why there's not a perfect structure is we are innovating at a very fast pace in crypto. The regulators are having a hard time keeping up with that. So I would really encourage us, the industry, to it's interesting. In the United States, we were very effective in the resistance to the SEC, trying to form industry groups. Now that we have we'll have a time period where we're more amenable to having these conversations. It's still important that we continue to work together in industry to advocate on behalf of the industry, but also have our own separate conversations. So, very optimistic, very bullish. But if the SEC, the FDIC, the OCC can be more like what we're seeing in Europe, Dubai, and Singapore, I think that'd be a huge step forward.
Absolutely, absolutely. Andrew, looks like you have something to add here.
Yeah, it's you're both right, Christian and Jeff. Is there a perfect regulation out there? No. I always think about principles first before, the written words of a regulation. What principles stick? And the New York Bit License, it's not a perfect regulation, but it's the original one. I was at the New York DFS when it was promulgated, and the principles, the concept of what activities deserve to be regulated. That's the threshold question. Second question, well, how are we going to regulate those activities, et cetera? And so I think you look at MiCA in Europe. I think MiCA's it's great because it's something. People, right? I mean, it has some gaps, as you mentioned, Jeff. It largely clarifies the asset class, but there's still gaps with MiFID and some other regulations, and we don't know how every member state's going to interpret it, which is going to be its own host of challenges. I'm hoping the U.S. can avoid the problems other countries have faced around fragmentation. You've got 50 states in the US. Maybe 40 of them have different rules. You've got the federal government, you've got agencies conflicting with each other on the same token. The CFTC has a different view than the SEC on the same token. And so, I think the biggest risk in the US is what it's been for 10 years now, fragmentation across different interests. And I'm just hoping everybody can come together and say, you know what, let's have one or two really simple frameworks that everyone can understand, and let's move on. And I think principles is probably the place to start, as opposed to overly complicated 200-page treatises that nobody can understand, including myself and JD and everybody else on this call. That's my hope.
Yeah, and I'll just close the loop here on I think perfect regulation, no. Do we need something specific to crypto? Yes. But let's not minimize what's been the progress that's been made already under existing regulations, right? Like, so 21 shares is regulated by the SEC, the NFA. We have to send because we're dealing with public funds, right? We need to send marketing material through a FINRA registered broker dealer. So that's the existing framework helping to make progress with a crypto-based, public side fund here in the United States. So I think, again, that regulatory clarity is what we're all asking for. We're all asking for, like, to have those conversations to get that clarity. Because if you could say this is a security or this is a commodity, then even the existing framework can help, right? And it has started to help, bring these products to the public. Does it need to be innovated upon and be specific to crypto eventually? Yes, I do agree with that as well. But that's a longer process.
I couldn't agree with you more, JD. I think if we think about this year, we saw the most successful ETF launch in history, right? And that's with an adversarial or a lack of clarity on the regulatory side, if you will. Another question we just got here from the audience was, what are the biggest regulatory challenges companies are facing today? And I think we talked about that from an ETF issuer perspective when it comes to innovation and when it comes to figuring out what we can put in an ETF and what can't be. But curious on the BitGo side, when it comes to custody and when it comes to that business in particular, What are some of the biggest challenges from a regulatory perspective that you guys are facing?
I think custody is pretty straightforward, right? Our licenses allow us to custody anything, because we're not trading this. So, when the SEC comes in is this a security without a prospectus? I think our biggest challenge, though, is all the other components of crypto, the bank partners, the rails, all of those things are still choked off. And until that opens up, some of the limitations of crypto are going to be present. So I'm really hoping that the conversation that happens, come January is how do we unlock all of this and have some good conversations? And whether the White House leads it or the White House gets out of the way, but appoints leaders for the 4 or 5 agencies that are critical to our success, that's kind of what I'm hoping at, right? Under the previous administration, we should be remembered that, when Trump was there the first time, he wasn't the biggest fan of crypto. Treasury wasn't, but we had the OCC who was open. There were different, perspectives. But then COVID happened and they got distracted from trying to actually move the ball forward. They had bigger fish to fry. Hopefully, we're going in with our eyes wide open and say, hey, we have the ability to lead as a nation. I think Trump, ran on, how do we get innovation and jobs and everything back here? Here is one of the big growth stories of the last 5 years have been crypto and fintech. So hopefully, the group of leaders, whether it's at the OCC, the FDIC, and the SEC, work together on clarity and a way forward. I think we could be super successful here in the U.S. If, though, we get one of those agencies that puts up their hand and go, you know what, we need more consumer protection from the CFPB, right? We're still going to run into some kinks. I'm super optimistic that Trump's going to put people in there. That to the point of this entire panel is have the conversation. We're not saying don't have the conversation and we don't need any regulation, but we need to have smart conversation, build on that framework of principle-based, right, while we figure out all of the technical rule-based. We had a lot of the chicken before the egg conversations here. I need to know what, form from the SEC to fill out versus I know what is good, customer disclosure and protection. When Andrew's talking about principle-based, we've all come from TradFi at some point in our career, some more fintech or engineering led, but we know right from wrong. We just need the ability to go implement those things.
And Jeff, I think you made a really interesting point around consumer protection. I think every single person on this call is asking for regulatory clarity, which means we want regulation. We want proportional regulation that helps consumers. And so I think your point about the consumer here, this regulatory fragmentation, it's hurt innovation, but it's also hurt the consumer. And so I actually view this effort, hopefully by the new administration, as pro-consumer, pro-innovation. I don't think those are incompatible.
100%, right? If we had the clarity that you could have had exchanges operating safely here in the U.S., maybe one had an FTX failure, right? But we've had to push all that stuff offshore because people wanted the product, but we couldn't give it to them here. So hopefully, yes, consumer protection is part of the answer, but a regulatory framework to operate under is like the leading goal of how do we get from where we are today to where do we want to be in 5 years.
Excellent. Well, we are right at time here, guys. Thank you so much for the last 45 minutes. This has been super insightful. I hope everybody in the audience enjoyed it as much as we did. Any questions or anything, I hope everybody has our contact information at 21 Shares and BitGo. And we are all available to help with any questions that may come up. So thank you to our panelists, and we will be speaking soon.
Thanks for having us. Bye, guys.
Yes, thank you.